Good weekend, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for the weekend of December 13th, 2024, and what a weekend it is. I want to prepare you all. You know, my job here is to point out things. I'm watching how the regional bank ETF's doing. It's not doing well, and I'm wondering why, and I think I've got it. You know, there's about $500 billion in commercial real estate loans that are coming up in 2025. At the current rates and where they're at, and the banks have worked really well in helping these, there's going to be some what I call pain right around the corner. How well these banks are prepared, I can't answer. They're not the same as the big banks, I can tell you that. Lenders often, or the people trying to borrow money, often in regional areas, go to the local bank because they can get better deals without often, and this is traditionally, as much money down as if you went to one of the big banks and you were trying to borrow from them. In addition, you know, you can work with your banker. It's one-on-one. Try that with these big banks. It's very, very difficult. Yeah, they go, I've got my private banking sector. But as soon as you need something, well, you know, there's got to go through all these channels and all, versus your regional bank, which I have always appreciated for what they can do for people. The problem is there's going to have to be the taking of the losses. So there's the wiping up of capital by some of the investors. There's going to be the bank taking a certain amount of a hit. And I think that's going to be a problem for the economy coming up. I also don't think we're going to keep getting these stellar gains that you've had for these past couple of years as we came off zero interest rates. Now the market has to deal with the fact that interest rates are where they're at. Roughly, and let's just talk the 10-year, it's sitting here at the 4.4 level for all purposes. That's a lot different than being at 0, 1%. You get what I'm saying. I hope you understand what I'm getting at. And the maturity of the AI, it's getting on. So it's not the newness of it. Now we will be in 2025 where you've got to prove that all this money you're investing is going to make money for you. There will be places where it absolutely doesn't. We know the people that are making the money at 70% profit ratios are the chip makers. And that is why no matter how you look at the other indices just again on Friday and look at QQQ. One day doesn't prove the point, but QQQ is the easy one that keeps going up because it goes slightly out of favor and then right back in as soon as the earning numbers come. Broadcom comes out with whatever it's doing. Now you're going to get even more volatility there as MicroStrategy made it into the NASDAQ 100. But remember, that's not really about anything as I see it, but Bitcoin. So it's going to be pretty wild what goes on and fun. All right. So I wanted to look at ARKW. Haven't done this one. We've looked at ARK. And by the way, ARK has gone, in all fairness to Kathy Woods, it's moved from the $40 range to the 60 level. But this is the one that's got the better play. If you look at the names in it, it's more interesting, and the market sees that. So just to give you an example, in July, this market was trading at 63, and now you're at 117. So it has caught on fire with the whole AI move because she's well positioned in there, and this owns Coinbase, shares in that pretty well also. The trend has been up, and you haven't even had a correction in quite a while. You had a bullish crossover right here. Do you see that? And when that happened, it often means it's when the 18-week average got over the 200, it often means you're going to get acceleration to the upside. I wish I could tell you it means it every single time. It implies it, it doesn't mean it happens. It certainly happened, though, on that time. Now, you've been hitting and running the Bollinger Band, and now you're getting to the point where you've settled back under it this week, and that keeps the market honest. But it's been one heck of a move. For whatever reason, you'll get a break in the market at some point. I'll wait, see where that comes in. This number, if you look at the 18-week average of closes, let's see if I can get this to move at all. No, it doesn't want to move. Oh, yeah, there we go. It is moving for me. That's what I wanted to show a little bit. Nah, it's just moving the whole page. I'm sorry. We had a nightmare at my company with the newest Microsoft big download. And it threw everything in our recordings up until yesterday at 6 o'clock at night. Crazy. We still have a few problems here. It impacted dramatically all my spreadsheets when I bring in stock market data. It impacted dramatically everything here. And when I tell you we probably put man hours, I don't know, 14 to getting everything back where it was just a nightmare of a build that they've got. We're through the problem. We're finding little things like this, and I'll get that fixed. So as we look at the market, you can see you have the embedded reading. First big break, I still think traders will step in and try to buy that market. XRT, it's fighting right here. Be careful of this. If the market starts to drop back through 82.54, you've got a situation where you're trying to hold on to an embedded reading. That probably caused this to start spiking down, and you could all of a sudden be in a problem area. Be careful. K-Web, I am not friendly, and I've done my best to explain why, but I just don't believe things that China says. As I started off saying, I think they have problems. They've got to figure out what they do, how they let their currency run, where it's going to run. I think they'll lift the top of their band from 7.2 yuan to 7.5 versus the dollar. Before we go any further, I'm not sure that I told you, and I do want to show you this. The report you're going to get Monday will be the Fed Empire State Manufacturing Survey, and that comes out at 7:30. They're looking for a cut by 50% of the last reading, but positive is still positive. It's just not gaining at the same pace. Then the S&P Global Group's coming out with their prelim December manufacturing and service sector PMIs. Still a negative, not over 50 in the manufacturing, and staying very well in the 55 level, if you will, 56 level, which is still growth going on in the service sector. So that's how you have to look at those. All right. So as we come back here, I wouldn't be surprised if we try to challenge all this week, unless China decides to come out and tell the market, oh, here is what we're going to do, or here's the ways we're going to do it. They've been very closed-mouthed. When we look at MCHI, it's the same thing. You get that part, and look at how you fell apart, closing right at the lows here. And you did the same darn thing in K-Web, closed right at the lows. That's why I'm so negative. They gave up everything that they had, and as soon as we heard what the statements were as they've been leaked out, it's not good. I don't care what they say they'll do in March. This is December. By the time you get there, the market speculates. When you look at Home Depot, this is a big move. Market just peaked itself out, coming down, could be headed back here to the 398.5 zone. It's holding on to an embedded reading, but it's going to, on the beginning of the week, it's going to lose that right away. The way that the weighting goes with that, you'll be under the 70, under 80, probably under 79 fast, but then you got the rest of the week to see if you can come back. To me, it's a big warning sign that I think the pros are coming out of any longs. In Meta, you're up to the upper Bollinger Band, should have problems, but it's a new high on the move. Okay? When I say a problem, you're overbought, you're up there. That's all the problem is. The bias has been up, and it's been up since back here in July, August. See that? Once you got over that, you never really got back under that 18-week average of closes. In KRE, and this is where I wanted to start you off, I suspect there's big problems coming. And I doubt that I'll be telling my clients now that they should be buying this until I'm a little further along. I want to see what I want to see. I'm ready for a problem. I'm reading little article parts that are buried away as to how much debt's coming due and banks having some issues and what percentage of the loans, the CREs that they've got out there, are now going into default stage, and I'm watching it very carefully. It's not affecting the big banks the same way. The smaller banks have double that percentage than the big banks. So be careful. The market sees that, and that could be weighing on this market to a degree. XLI, the industrial sector, well, we just saw that these numbers aren't still, for example, the New York Empire Survey, it's not showing that this thing's coming back to life yet. Same with the manufacturing sector, and that's what this all is. Manufacturing, industrial, same thing. No trend, turn down with the momentum here, probably going to hit that 18-week average and try to figure out what it does. The energy sector, well, the problem in the energy sector isn't in the oil per se, it's in the service industry right now. I don't see CapEx being spent in a big way by the big providers to drive this right now. Oil prices are going to be this. They can get more out of the same well via technology than spending money on a new well. And while Trump has his 4 years, after that, are we going to go back to let's shut this all down? Here's the reality of the situation. As much as we want to go green, and we do want to go green, and as much as we put up energy sectors such as wind, you're still at Mother Nature. And in wind, if you looked at what's going on in Europe, they have all these large wind farms, and yet those that have them are still buying record amounts of line electricity and like, because the wind dies out. And they just had it happen. So what happens there is they don't have the storage facilities. It is a technology that is coming. It is something, but you're not going to do away, in my lifetime, you're not doing away with crude oil, I can tell you that. When I look at UUP, higher lows, higher highs, I thought this would break more, as you know, and we never did get it. And this is the dollar. I was hoping for more of a break. You're not getting it. You'd have to now come back under here, 29.84. I think you're going to 30.62. I think the dollar stays strong. The market's already absorbed what the Fed's going to say on a 25 basis point cut. That's what's built into the market for this Wednesday. And I think the market is built in that the Fed is going to go into a pause for January. So be ready for that. In the gold market, big test coming up. The 240, 260 level. Will it hold? If it does, that's where I think the pros will nibble. The word is nibble, and I think they'll bail if you get under 241.48. We'll see if that happens. Copper market, now I want no part of that. Copper is 50% consumption by China, and they didn't give me anything that I wanted this week. So I told clients, stay away from this market. Watch what the market does, not what China says. So their stock market rallied off of what they said because they run the state papers. The world market, as soon as I saw how copper reacted, I talked the game and I watched the game. I just said, that ain't good. So, sorry about that. You put it all together, you come up with game plans, and that's the name of the game for you and for me. And if you want to take advantage of our free offers, they're right here. You go to irapstein.com, free offers, and when you get there, choose the ones you want, select this offer, and they all look like that. Goes into a cart. Then at the bottom of the page, you just go in there, you put in your name, your email address, so we can email everything to you. If you have comments for us, do it there, and we'll get everything out to you. I'm Ira. Should be an interesting week with all this bank activity, and it's one of the last weeks before Christmas, remember, where we're going to get a full weekend of trading, and then people start drifting away until New Year's Day has come and gone. I'm Ira. Take care. I'll see you Monday morning.